Hey, what's up? This is Cody the Coin Raptor, and welcome to my channel. I'm here to provide you the best crypto content you can find in 10 minutes. All right, let's start with our Bitcoin charts. Bitcoin, as you can see here, has had a very strong rejection down, trying to break out of this downwards channel I've put it into. So it tried to break out here at about 23,100. It failed, and now it made a lower attempt here at about 23,000 or so. So right now I'm looking to see whether Bitcoin continues this point or not. I want to see some kind of interruption of this channel. I want to see a breakout. If Bitcoin pushes out of this channel, I think that's very bullish. But for now, it's still bound in this channel. And the top of the channel right now is about 23,000, and the bottom is about 21,600. So we'll see what happens. A lot of this is going to depend entirely upon what the futures markets do tonight. So when the futures markets open up, we're going to see either it go up or it go down, stock futures that is, and then Bitcoin's going to move either up or down in sync with them. So and then appropriately Monday or tomorrow, we're going to see the market open up, and if the market is green, the stock market is green, Bitcoin will push up, and if it's red, Bitcoin will push down. I have no doubt that if the market opens up green, Bitcoin's going to break out of this channel. It's very close to breaking out of the channel. Same thing for Ethereum, same thing for the other cryptocurrencies. It's definitely very likely, if we get a green day, that it will push out and break out further. For now, I'm just waiting to see what happens. RSI right now is 47, so it's in the middle of the range. It's not too overbought or too oversold. All right, so let's talk about Ethereum. So I've put together an ascending triangle formation here for Ethereum, and what that tells me is that it's currently following this very bullish formation, and if the ascending triangle pattern plays out, it should break through this strong resistance point here at about 17, between 1710 and 1730 in this whole resistance band here. So if we get a strong market day, we get a green day, it'll push right through this, and it will go on to make it'll go on to attempt trying to break out at about 2,000 or so. There's some resistance there at about 2,000, and I would expect that if we get a green day, it's going to retest that resistance level for sure. Now, let's go ahead and talk about our primary story here, and that is our Bitcoin dominance percentage. So Bitcoin dominance is taking or measuring the share of Bitcoin compared to the broader cryptocurrency market cap. So right now, what it's telling us is that Bitcoin currently holds 41% of the total cryptocurrency market cap. So if we take a look at the charts here, what we can see here is that around May or so, people were buying Bitcoin, and they were buying Bitcoin very strongly. They were looking at this potential bear market coming in, so they wanted to flee to a safer asset. They bought Bitcoin, bought Bitcoin, bought Bitcoin, and then they go to about the 11th or so of June, and then that marks a huge shift where now you start to see the Bitcoin dominance downtrend, and downtrend very strongly. Because what happened here is traders and investors decided that instead of having Bitcoin, they're going to buy altcoins, and they're going to buy stable coins. They're going to buy stable coins in order to protect their money because the stablecoin value doesn't change, or they're going to buy altcoins because altcoins had gotten so cheap at that point that they saw fantastic opportunities. So Bitcoin dominance downtrended all the way from 48% down to now 41%. A massive drop, massive. And Bitcoin dominance has completely sliced through the support here at about 41%, 41% or so, and it continues to put candles underneath this support level. Now, the next support level for this Bitcoin dominance would be at about 39%. So what this tells me here is the market has gone risk on, okay? Has gone risk on. A lot of people are buying Ethereum. A lot of people are buying Solana or BNB or whatever tickles their fancy for altcoins. All right, there is a certain percentage of traders who are doing that. And then there's a percentage of traders who are putting their money into stable coins. They're almost like opposite bets, because one party thinks that stable coins are incredibly cheap and they want to buy stable coins at these prices. And then the other party thinks that there is more pain to come, so they're putting their money into stable coins. So you have, again, one party who thinks things are too cheap, putting their money into altcoins, and one party thinking that things are that we have more pain to come and putting their money in stable coins. So when we take a look at the crypto, the coin market cap, and we take a look at the top 10 cryptocurrencies on CoinMarketCap, you can see here that we have approximately 3 of them. 3 out of the top 10 are all stable coins: Tether USDC and Binance USD. So what it's telling me here is that there's a significant percentage of people who are putting their money into stable coins. All right, so let's go to our first story. And our first story, which I thought was pretty funny, is that there has all of a sudden been a flood of Rolex watches and Patek Philippe watches. So the fanciest of all the fancy watches that cost $10,000, $15,000, $20,000. There has been a flood of these watches on the market, and I think it's really funny because it seems like what's happening here is that when Bitcoin and the crypto markets were heading downwards and moving down and moving down and moving down, people were selling their watches either in order to pay their debts, in order to pay off their margin calls, or else to buy more cryptocurrency. So we can see that. I definitely recommend to take a look at this, but this crypto collapse apparently is flooding the markets with these incredibly expensive watches, which no doubt people bought on the way up, and now they're selling on the way down. Next, very important, how to spot the next Celsius before it's too late. So there are some warning signs for certain platforms that may look a little suspicious, okay? So there's some red flags that should pop up in your mind when you're looking at a lot of these crypto platforms. One of the primary telltale signs here is unusually high yields. So that's something that Celsius provided. They would often say, well, you get close to 10% plus, right? Unusually high yields. UST Terra and on the Anchor protocol had approximately 20% yield. So you should be asking yourself, well, how are they getting those yields exactly? And then speculators should also treat incentive schemes that reward holders for not selling with suspicion. So many of these platforms will say, well, if you stay on our platform, you don't sell, then we'll give you extra bonuses. And another red flag here is the regular use of leverage. Leverage can be incredibly dangerous during any sort of fall, any sort of bear market. Leverage and margin calls will happen and people will get wiped out. Okay? And then they talk about contagion, and they talk about how important it is to manage your risk appropriately. And I think that right there is the most underutilized skill in the entirety of the crypto markets. Investors, traders do not do the proper risk management. Instead, they just see dollar signs and they go all in for many meme coins and platforms that offer massive yields, okay? Now, that being said, I don't think that something like staking and staking yields is suspicious, at least not for the top players in the crypto space. You know, your Ethereums, your Polkadot, you know, top 10, Solana. I don't think that those are scams. I don't, as long as you're staking directly on the blockchain itself. So that is probably where I would wind up drawing the line when it comes to high yields. Some of those yields can be very high, close to 10%. Next, we have crypto investor Kevin O'Leary from Shark Tank saying that there is institutional demand for Bitcoin, right? There's institutional demand for Bitcoin, and it is insatiable, okay? And this is something he's been saying for some time now. If you're following Kevin O'Leary, he's definitely said multiple times that there are these huge institutions, sovereign wealth and pension institutions that are interested in buying Bitcoin, but they can't buy Bitcoin because it is not regulated. So he's saying that if it gets the adequate compliance infrastructure, okay, aka regulation, if it gets reasonable regulation, then you'll have these sovereign wealth and pension institutes come in and they'll buy Bitcoin, right? And he's saying, well, the price appreciation will be incredibly dramatic. You'll have a gap up of 10, 15, 20%, or 25% overnight because you've opened up trillions of dollars worth of assets to a new asset class, which doesn't happen often. And I definitely believe that that would be the case. I would also put in that category having a spot ETF approved on the Nasdaq or whichever exchange. That would be huge because that would also allow these institutions to finally get their Bitcoin exposure. That right there is the holy grail of institutional investment. Getting a spot ETF and then also getting these firms to the point where they can buy Bitcoin. They're legally allowed to buy Bitcoin, okay, because it's regulated, but fairly regulated. Okay, if you like this content, please let me know. Please like and subscribe. Leave a comment. I greatly appreciate that. Follow me on Twitter for the most recent updates. And that's all I've got for you. This is Cody the Coin Raptor signing out.